Good morning. We are live. It is Monday, October 3rd. This is the deep dive with Keeping Current Matters. My name is Kate Rezabek, and I am so thrilled to be here with you today, starting out our Monday with some of the most important topics in the housing market and really a lot happening right now. And it is such a joy week after week to be able to come back here, have this discussion with you, and talk about what's happening. And if you're new to KCM, welcome. Thank you for being here today. Thank you for checking this out, for really prioritizing what's happening in the housing market, learning about it, learning how to communicate what's happening. Really, what we try to do is position all the things that you need to know in a way that you can simply and effectively explain it to your clients. For those of you who may be feeling the effects of Hurricane Ian, know that you are in our hearts and on our minds. We are thinking of you. If you have clients or agents that you know who have been affected, reach out. It's always a great time to check in on people and show them how much you care. So know that we are thinking of you as well in this critical time. And, this housing market is a critical time for a lot of people. And we're going to be talking about mortgage rates today. That is one of the biggest things on everyone's mind. What's happening with mortgage rates? Will they keep rising? That's what we're calling this one today. We're going to be talking about what's happening, what the experts are saying is ahead, and most importantly, how to help our clients succeed in a rising rate environment, because that's a big question for everyone right now. And we want to make sure that you are positioned with the vetted research from our research team, the visuals that can help you have powerful conversations, the expert quotes on what is happening. There's a lot of uncertainty out there right now, and we want to bring clarity to that for you, because that is really the most important thing that we can do right now, is bring clarity to the conversation. So I'm going to be sharing some slides today that I want you to have access to. So you can go to, if you are a KCM member, you'll be able to find these slides in the recap of this deep dive in our member area. So be sure to head over there. And if you're new, try kcm.com. That's the place to find the visuals, the slides. You can customize them. They are all for you. You just have to head over to trykcm.com and you can download all of those for you. So as I mentioned, we're going to be talking about mortgage rates today. I think it is just about time to get started. So I'm going to go ahead and share my screen. So will mortgage rates keep rising? That's what we're calling this one today. And I have to say, this is probably the most important deep dive that you can tune in for. Right now and over the next few weeks, we're going to be bringing you so much information that's going to have to do with mortgage rates rising, what's happening with prices. This is the time to be tuning in. And I'm so glad you're here today and prioritizing this, because will mortgage rates keep rising is definitely on everyone's mind. That's exactly what we're going to break down here. And, this is a very pivotal time for your buyers, for your sellers. And what I can say is that informed buyers will succeed. And if you can be that trusted voice in the market right now, that's what's going to be the game changer. If you can go out and help your clients navigate through a rising rate environment, that's going to be key, because there's so much fear and uncertainty out there right now. And we want to bring clarity to that for you. So let me show you this first quote. I think this is so powerful. This is from Mark Fleming from First American. And what he says here is, when the economic uncertainty dust settles, those buyers and sellers who are on the sideline will jump back into the housing game. Demographic trends support elevated purchase demand in the years to come. So it's a question of when, not if, for the housing market. So what does this mean? We talked about it: fear, uncertainty, volatility, headlines, media, all the things that are putting pressure on your clients. They're not sure what to do right now. They're seeing things that are causing them to press pause in their home search or stop and think about it before they really make that confident decision. And the reality of it is, they still want to buy. They still want to move. The purchase demand is there. And if you're feeling the effects of this in your market right now, know that being the trusted advisor and being that certainty in the market is what's going to make those buyers, those sellers come back to you as the expert when the dust settles. So let's take a look at what buyers and sellers are seeing right now. These are some key words that they're everywhere right now. Look out below, falling, crash, drop. Everything out there is causing confusion. And truly what will happen in this time of uncertainty is that in times of uncertainty, people will follow the certain. And we want to set you up for success in that because your clients need you right now more than ever. They need your expert advice. It doesn't have to be perfect advice. You hear us say that over and over and over again. It's not about giving perfect advice, but expert advice. And that's where you can position yourself as the trusted advisor. So this deep dive is so important with the messages that we have in the following weeks. We're going to talk about those at the end of today's deep dive. And I'm going to position you for success in these conversations because here's what your clients are truly seeing right now. We're talking about mortgage rates. So take a look at some of these headlines. The U.S. housing market stares down an even bigger economic shock. Mortgage rates near 7%. Mortgage rates reach highest level since 2008. That is very scary to a lot of people. And 30-year fixed rate mortgage jumps over 7%. So this is what your clients are hearing. This is what is happening right now in the housing market. And what I'm going to set up for you today is the clarity and where this is headed and what you need to know to help your buyers as they're seeing this fear and uncertainty that may be causing them to press pause on their plans. So if you follow along with us, you've seen this chart before. This is a graph of the Freddie Mac 30-year fixed rate mortgage from January 2022 to today. So everything for this year. And mortgage rates are rising for the sixth consecutive week. That's what you can see in those orange bars over there on the right. So started out the beginning of the year, very low, almost historically low mortgage rates. We've seen that progressive climb throughout the year. We've seen a lot of volatility even over the past few months. And look at the past 6 weeks. This is not news to you. You've seen this, you're feeling this. This is showing the Freddie Mac 30-year fixed rate, which we know is a look back. So we know that the 6.7% that was the average rate that was released last Thursday is a look back at the previous week. So hear me loud and clear when I say you may be seeing something even higher than that right now. That is the reality. And what we can see is how sharp that incline has been over the past 6 weeks. That is what is causing a lot of the fear and uncertainty. It's causing home buyers to say, I'm not sure that this is my time. I'm going to wait and see what happens, and what we want to do is make sure you have the information you need to help your clients navigate this type of environment because it's not easy. I hear you on that. So let's take a look at what's happening. This is a quote from Sam Cater from Freddie Mac, and it says, the uncertainty and volatility in financial markets is heavily impacting mortgage rates. Our survey indicates that the range of weekly rate quotes for the 30-year fixed rate mortgage has more than doubled over the past year. So that's pretty significant. You've heard us use those terms, uncertainty and volatility. That is what's driving mortgage rates up. And I want to break that down for you today and talk a little bit more about why. Well, this is all about inflation. When inflation is rising, that's what happens. So let's take a look at this quote from Odetta Kushi from First American. The first part says, the aim of the Fed tightening is to curtail demand in an effort to tame inflation. And when it comes to the housing market, the Fed's actions are working. So let's pull back a layer on this. What does this all mean? Well, I said it's all about inflation, right? The Fed is doing their best to bring inflation down. Now, to do that, they raise the federal funds rate. That's what you've been hearing as the Fed has been meeting month after month. Now, we know that the Fed does not call mortgage rates, but there's certainly an influence on them. So when we see inflation high, mortgage rates tend to follow. And that's exactly where we are right now. The Fed is doing everything they can to bring inflation down. And in the meantime, while inflation is high, mortgage rates are continuing to rise. So they're making an effort to slow the economy. Housing is a big portion of that. We've seen housing really explode over the past couple of years, that unsustainable pace, rising prices, record low mortgage rates, huge demand. The Fed is trying to slow the economy down. And that's when we say their actions are working because there's an impact to the housing market right now due to these rising mortgage rates. And this quote goes on to say, home sales, both new and existing, response to rapidly declining affordability. We've seen that happening. We've been talking about that happening. And annual house price growth has slowed from the peak of nearly 21% in March of this year to 16.7% in July. And we're continuing to follow that. You're going to hear us talking a lot about what continues to happen with home prices, with new construction, with demand and sales. All of the moves that the Fed is making are helping to slow the economy. And this is the impact that it has on housing. So what's on everybody's mind is, well, then what's ahead? What can we expect going forward? And I think that this quote helps to define that. It says, this is from George Ray too, from Realtor.com. It says, well, even 2 months ago, rates above 7% may have seemed unthinkable. At the current pace, we can expect rates to surpass that level in the next 3 months. So what is he saying? A couple of months ago, experts weren't forecasting, rates above 7%. They were definitely forecasting some rising rates, but now we're talking about rates a little bit higher than even what the experts thought back then. And that, again, it's all tied back to inflation. As the Fed can get inflation under control, we will start to see mortgage rates respond. But right now we're seeing mortgage rates rising. And that's what we've been telling you all along, is that you've got to watch inflation to understand what's happening with mortgage rates. And you can see that playing out over the past 6 weeks and all the impacts that has on the housing market. So until inflation shows signs of really coming back down, then this is kind of the rising rate environment that we can expect. Now, what we really want to talk about is, so what do we do? That's the bottom line. That's the big takeaway. How do we help our clients in environments like this? Well, this quote from Realtor.com starts out by saying, there's no doubt that the increasing mortgage rate will make home buying even more challenging. We're seeing that with affordability challenges. We're seeing that slowing buyer demand. There is a challenge out there because of this. But here's the silver lining. Buyers may still find opportunities as these changes coincide with the time of year when buyers have historically found the best market conditions to obtain more bargaining power. So what does that mean? Well, this is the time of year where inventory tends to rise. It's rising. It tends to peak right about this time of year. We've seen inventory rising throughout the year as buyer demand has slowed. So there are more choices on the market right now for buyers. Buyers who may have been outbid more times than they can count over the past year. The frenzy is behind us. So for those people who are ready to make a move to find that home, now may be an opportunity that they didn't have before. And so we have to continue to remind our buyers, it won't be easy. There's no doubt. It's just less difficult than maybe what it was before. And what else can we do? Well, we can help buyers find more affordable locations. We can talk about down payment assistance programs. And this is really a pivotal point to be making sure that, you have a trusted lender in your network that you can connect to your clients, that can help them find get pre-qualified, to find the right mortgage for their situation, to really explore all the options that are out there and understand what best fits their needs. Having that team of experts can really help people navigate these rising rate environments, because there are so many people out there who still need to buy a home, people who need to move, who have a job change, who have personal situations, who, want to move a little bit further away from the office, maybe into a more affordable area. There are plenty of people who are out there and eager to move. And I think we set that up at the beginning with, as the economic uncertainty dust settles, buyers will be there. And you being the trusted advisor, the person who can help them navigate through this, is mission critical, because informed buyers will succeed. And you can step into that space as the informed expert, the informed agent who can help through this transition. Because as people come back, as people need to make those moves, they will be looking for you as the trusted expert. Now, I have one more quote that I want to share with you. This, again, is from First American. It says, while mortgage rates are expected to continue to drift higher, over the coming months, much of the rapid increase in rates is likely behind us. That is great news. Much of the rapid increase has already happened. Nationally, while the month-over-month house prices may decline, annual house price declines are not expected. Put a pin in that for a second, given the ongoing supply-demand imbalance and continued strength in the labor market. I share this quote with you because I know mortgage rates are top of mind for everyone right now, but so are home prices. We've been talking a lot about home price deceleration, what's happening on a year-over-year basis, what we're feeling on a month-over-month basis, especially in some overheated markets. And what I want you to do is, as we wrap up this deep dive, know that we have a pricing update coming for you. So we release a monthly market report every month. It's coming out this Friday, actually Friday, October 7th. In our member area, we'll have a monthly market report that's going to continue to build on this mortgage rate conversation. And it's going to have our most up-to-date home price information, everything you need to know to pull all these pieces and have these conversations with your clients. We're very intentional about how we stack these conversations, from deep dive to monthly market report, you name it. We want to bring it all together for you simply and effectively. So head over to our member area, find the monthly market report on Friday, October 7th. We are not going to be live next Monday. We usually come on Mondays at 11 a.m. Eastern. Next week is a holiday, so we won't be on live. We'll be back on the 17th. But in between now and then, I want you to watch that monthly market report, because that's going to be the best answer to your question on how we continue to help our clients through this environment, rising mortgage rates, what's happening with prices, and all of those pieces coming together. So I think that's going to be a really great place for you to go. So before we wrap today, what I want to do is remind you that we have our wonderful video masterclass for you. We have put this together with our team. We've pulled in industry influencers, video experts. You know that the best place that you need to be for your clients is on video. Our masterclass will help you do that, help you overcome your fears of being on video, all kinds of best practices, ways that you can get your message out to your clients. You can go to trykcm.com/masterclass. We are currently giving away 3 sections of this masterclass for free. You don't even need to put your email address in there, but you can go to this website and check it out. And then, of course, if you want access to the full class, it will give you the information to do that as well. So I'm going to pause here and ask Whitney if there were any questions that came up that we can answer this morning.
Hi, Kate. Good morning. We have one question that popped up in the chat from Carlos. He would like to know if you have any advice for new agents.
Oh, that's a great question, Carlos. I'm so glad you asked. You know, the number one thing I can say is have a relevant market opinion based upon fact. And that is exactly what we try to do here at KCM. It's help you have all of the information at your fingertips. We simplify it. We make it easy to understand, so then you can go communicate that out to your clients. So if you're in conversation with them, if you're listening and really understanding their needs, and then you can provide the resources, the answers, everything that they need. And, you know, we talk so much about, you know, having that opinion based upon fact. It is vetted by our research team. And when we put all this information in your hands, it should give you the confidence to be able to go out there and be that market expert. And I hope that's exactly what you do. If you have questions at any point, you can always reach out to us. My email address is kate@keepingcurrentmatters.com, and we certainly want to help you feel successful. All right. Was that it, Whitney?
Yes, that was the only question we had in the chat this morning.
All right. Well, thank you all so much. You know, in times of uncertainty, it's more important than ever to be certain, to be the trusted advisor. And I hope that you'll use this information to have those powerful and confident conversations, and go ahead and check out that monthly market report on Friday. Thank you so much and have a great week.